So you like leveraged ETFs and you like value. Can we combine them? Here I discuss the current options for a leveraged value ETF. Why would we want a leveraged value ETF in the first place? If you landed on this video, hopefully leveraged ETFs require no explanation. If they do, I've got a separate video explaining how they work. Basically, we're paying a fee to increase exposure and risk in the portfolio within a single fund. I've got some examples of popular leveraged ETFs in the video I linked, and in doing so with stocks, like with something like UPRO, a 3x S&P 500 fund, we also know we almost certainly want to diversify across assets and hold some bonds too, such as the case with the famous Hedgefundie strategy, and like I showed here for TQQQ. In short, holding leveraged bonds mitigates the portfolio's volatility and risk when holding leveraged stocks. But if you know anything about factor investing, we also know that we expect value stocks to beat growth stocks, and we get a convenient diversification benefit in overweighting them. That is, those independent equity risk factors tend to be uncorrelated to one another. They move at different times. As a result, I'd say it's reasonable to seek out a leveraged value ETF to further fortify your leveraged strategy. Others apparently feel the same, evidenced by the number of searches I get on my website for such a product. Unfortunately, at the time of this video, there is no leveraged value ETF. Period. However, several funds exist that may still fit the bill for a somewhat naive proxy. First is IWDL, the eTrax 2x Leveraged US Value Factor TR-ETN. IWDL is probably the closest thing we've got to a true leveraged value ETF. This fund launched in February 2021. It seeks to provide 2 times the quarterly performance of the Russell 1000 Value Index and has an expense ratio of 0.95%. Unfortunately, there are a couple immediate drawbacks with IWDL. First, you may have noticed that it's not an ETF at all. It's an ETN. Recall that ETNs carry their own unique risks compared to ETFs. Secondly, IWDL only has a terribly low $30 million in assets, meaning potential liquidity issues and risk of closure. Lastly, it's only 2 times leveraged, meaning you'd need a higher allocation of it alongside 3x funds. Second on our list is UMDD, the ProShares Ultra Pro Midcap 400. UMDD from ProShares seeks to deliver 3 times daily exposure to the S&P Midcap 400 Index. The fund launched in 2010, but still only has about $50 million in assets. While this may sound like a simple leveraged midcap fund, the earnings screen from the underlying S&P Index conveniently provides positive loadings across the value and profitability factors. We also obviously get exposure to the size factor by holding midcaps. One downside to consider is that the greater volatility of midcaps means volatility decay of the fund is going to hurt worse. UMDD has an expense ratio of 0.95%. Third and last on our list is UDOW or UDOW, the ProShares Ultra Pro Dow 30. UDOW from ProShares seeks to deliver 3 times the daily returns of the Dow Jones Industrial Average. This fund launched in 2010 and boasts nearly $1 billion in assets. UDOW and UMDD have about the same value exposure, but UDOW has greater loading on profitability, as well as a slightly positive loading on the investment factor. An obvious downside of this fund is that at the end of the day, the Dow is just a silly price-weighted index of only 30 arbitrarily chosen large-cap companies, which is pretty strange. As such, it does not provide well-diversified exposure to US large caps. UDOW has an expense ratio of 0.95%. These leveraged products, while not ideal, should be available at any major broker. Be sure to read up on the potential pitfalls of using leverage before blindly buying in. Again, leveraged ETFs are better suited for experienced investors. Remember that using leverage, especially in the form of leveraged ETFs, increases portfolio risk and the potential for greater returns, but also the potential for greater losses. Do your own due diligence and read the fine print on these products. Do you employ a value tilt in your leveraged strategy? Let me know in the comments. Thanks for watching. Some of the links below are referral links at no additional cost to you. If you choose to make a purchase or sign up for a service, after clicking through those links, I may receive a small commission. This allows me to continue producing high quality content on this channel and pays for the occasional cup of coffee. I have first-hand experience with every product or service I recommend, and I recommend them because I genuinely believe they are useful.